Next up, I'm going to yank this back into order. Minister of Women and Gender Equality and Secretary of State for Small Business and Tourism, the Honorable Rechi Valdez, really wanted to be here this morning. Unfortunately, she has had a scheduling conflict and so has sent this lovely video for you.
Good morning, everyone. Bonjour à tous. C'est un plaisir de me joindre à vous par vidéo. I'd like to acknowledge that we are gathered on the traditional and unceded territory of the Algonquin and Anishinaabe people. To Shannon and the whole team at NACA, congratulations on 30 years of advancing Indigenous entrepreneurship across this country. 30 years, that is something to celebrate. Our government is proud to stand behind your work. Just last month, Shannon and I were together in Nova Scotia to announce the Indigenous Tourism Fund. Projects like the Mi'kma'ki de Bird Cultural Centre and the River Cree Nation's new thermal spa are creating jobs, welcoming visitors, and building lasting community prosperity. And through our government's women entrepreneurship strategy, we are investing in women across Canada, including Indigenous women entrepreneurs. NACA is a proud partner in that work, and I want to give a shout out to Magnolia Perron and her leadership. When Indigenous entrepreneurs succeed, Canada succeeds. Thank you et merci.
I always like these third days of a conference when it feels like we're all getting to know each other a little bit. We're all old friends now. Big shout out again to the youth panelists and underscore a few of the things that they had said. Meet the youth entrepreneurs where they are at. When we meet the youth where they are at, they will get further than anything we have ever imagined. I really liked hearing mentorship means realness, and the youth have the potential. They really just need the support. Coming up next on our final morning of this beautiful Indigenous Prosperity Forum, Scaling by Design, a data-driven fireside chat on the Indigenous Growth Fund. Capital, when deployed with precision, can shift the trajectory of entire economies. This session explores how the Indigenous Growth Fund is doing exactly that, accelerating the growth of Indigenous financial institutions, oh, we like to hear it, and the businesses that they finance. Drawing on new portfolio data from 8 IFIs, our panel will examine how additional capital has strengthened its lending capacity and fueled network-wide growth. Please welcome to the stage for the Scaling by Design panel presenters, Bill Murray, Director of Indigenous Growth Fund, Frank Richter, Managing Director of Indigenous Growth Fund.
Good morning, everyone. Thank you for joining us this morning for Scaling by Design, a data-driven fireside chat. Today we'll unpack how the Indigenous Growth Fund is helping Indigenous financial institutions scale their lending capacity and how that translates into growth for Indigenous entrepreneurs and communities across the country. This is all based on our annual report. This year, the theme of our annual report is scale, and you see a screenshot of our annual report, the cover photo behind us here. You should all have a copy of the annual report in your delegate bags. If you don't have that, it is also available on our website, indigenousgrowthfund.ca. This session is going to be visual and interactive. You will see aggregate data from IFIs that have accessed the IGF, and we'll use Slido so you can share reactions and vote in some polls. My name is Frank Richter, and I'm the Managing Director of the Indigenous Growth Fund, the vehicle that is building on capital from the Government of Canada, Business Development Bank of Canada, Export Development Canada, Farm Credit Canada to connect private investors to IFIs and to the businesses they serve. And our initial investors, I think, are all in the room if I look around here. So thank you for your investment in the fund. I'm also joined by Bill Murray, who recently joined the Indigenous Growth Fund, Inc. Board of Directors. So that's the GP Inc. Board. So welcome, Bill, as well.
Thanks, Frank. I thought I was just going to be your quant and just stare at numbers here, but thank you for inviting me to this amazing event. I mean, how inspiring was that youth panel? Just the energy and the exciting businesses that they're starting. So really looking forward to learning and hearing about all the great businesses and the IFIs that are lending them the money and learning as we go over the next few years. Just my background really quickly, I'm Director of Asset Management for Indigenous Markets at CIBC Global Asset Management. So Darian mentioned those settlements, the trusts, the cows and plows. So we build portfolios for the nations when they receive those funds, invest them for the long term. And we also do some of that education that Amanda had mentioned, training the trustees, counselors, and even the members of the community on budgeting and investment markets. So, but more relevant to today's conversation, over my 25-year career, I've also been an owner-operator of several businesses as well. So I was on the other side. I joined a startup investment bank, spent 7 years there, became the second largest shareholder. We grew the equity tenfold. I worked in private equity for 5 years, so also that component of capital that these businesses need aside from the loans, the equity. We bought 12 companies. We helped the founders sort of retire and build a succession plan and grow those companies. And then most recently, I was a chief financial officer of a startup. We raised 5 rounds of capital of both equity and debt, made 4 acquisitions, and we ended up selling off the assets. So I've been on the other side and seeing hundreds of companies and really excited to keep learning from all of you today. So.
Yeah, thanks, Bill. And it's so great that you joined the board. A lot of expertise and experience that you bring to the IGF team. Let's start with our first Slido poll. Get warmed up a little bit here. And so I'll give you a second to scan the QR code. And the question that we have here is, what word comes to mind when you think of scale? And so this is one where you can just type in a word and a word cloud will populate. So hopefully we'll have some things popping up here in a second. Oh, there are participants typing. That's great. Growth expansion.
This is like that maze the magicians put together yesterday.
No, this is fantastic. There are a lot of terms here that we will be touching on today. I see growth very large in the center, expansion. We'll talk a little bit about the different types of loans that IFIs make with IGF capital. Measuring that growth is what we're here to do today. We're seeing a lot of potential for investment, untapped potential. Capacity is an interesting topic as well. So yeah, great thoughts, great words, lots of things that we'll touch on today as well.
I just add to that, when I think of scale, I think of economies of scale, where you build up a business and you get to the point where you're adding revenues and you're keeping your costs, they're growing a lot slower. And that gives you the ability to sort of tap more markets, enter more markets, but also gives you kind of that business platform to withstand a downturn or any shocks. So a lot of great terms here.
All right, well, maybe we'll pause this one here. We'll have 2 more questions coming up later in the panel. And we'll start looking at some of the data that we collected for the Indigenous Growth Fund over the last couple of years. Maybe I'll talk a little bit in general first about the IGF, that there are always new people in the room. I know a lot of you have heard this a number of times. But the fund was launched and had its first close in 2021. Operations really started in 2022 with the first investment in an IFI. So we have 4 years of actual operations under our belts now. The fund is structured as a limited partnership like many other debt, venture, private equity funds. And since the initial close, when we had the Government of Canada, BDC, FCC, and EDC providing that seed investment in the fund. We've also brought on our first private investor block, Inc., and the goal is over time to bring in more private capital into the fund and by extension into the Indigenous economic development space. The idea there is to provide that long-term revolving capital to IFIs. So we have $153 million in capital committed from those 5 investors at the moment. Of that, we have committed back out to IFIs, to 8 IFIs, $104.7 million and advanced or deployed capital of $89.4 million to the same IFIs. That translated to $147.9 million in loans that have IGF capital in them to the entrepreneur. So once we advance funds to the IFI, the capital revolves in their loan portfolios. Many IFIs retain interest that they earn on these loans in the portfolio, growing it further. So the impact is really quite large and has reached 601 businesses to date. In 2025 alone, IFIs made $50 million in loan advances to businesses, and that's to 204 loans. And IGF made another 3 follow-on commitments of $20 million in 2025. This graph that you will also see in the annual report shows the 8 IFIs that we have investments in currently, and you can see here basically the timing of when we signed those commitments. You can also see that with a number of the IFIs, we have made follow-on investments, which is the plan for most IFIs, that we start with an investment and add on to that initial investment into the IFI. Crucially, the goal for us is to add more IFIs to this list, and we're projecting that for this current calendar year and IGF fiscal year, that we will be adding 2 to 4 more IFIs that currently do not have an agreement with IGF. So what does that mean on the ground? So this is a map that shows where the IGF capital was deployed into businesses. And you can see that we have a heavy concentration in British Columbia, and that's where we made our first investments, but also that the reach of the capital has broadened since we made our first investments across the country. I think what stands out to me still is that there are obviously gaps in the prairies, in the Yukon and the Northern Territories. And we're really hoping to add more IFIs to broaden that reach so that this map fills in even more with businesses that are benefiting from the additional capital that comes from the Indigenous Growth Fund. I think there's a slide missing. Oh, there we go. So I will just very quickly look at this slide here, and actually no, we'll do this one first. So you saw the businesses that were supported by Indigenous Growth Fund capital. We are also quite keen to grow the IFIs and help the IFIs grow as institutions. And what we were able to do this year for the first time is to aggregate some data and trend out how the IFIs have grown as institutions since accessing IGF capital. So what we've done here is we look at IFI financial data. This is annual data, and NACA has this data going back many years, so we were able to look actually backwards as well. And we took year 0 as the year when we made the first investment into each respective IFI. So if we made an investment in December of a given year, the IFI has a March fiscal year end, then it would be the March before that. So the light blue lines that you see here, those are the 8 individual IFIs, and it's showing how their overall portfolio, their overall loan portfolio has grown 4 years prior to accessing IGF and up to 4 years, because not all of them have accessed IGF for 4 years, up to 4 years after accessing IGF. The interesting thing here, I think, is then, even visually, if you look at the 8 lines, there is an upward trend after accessing IGF. And we try to show that even more clearly by calculating the average of those 8 IFIs. That's the pink line that you're seeing. And so you see that individual IFIs have more than doubled their portfolio since accessing IGF, even tripled their portfolio. So 200% plus means the portfolio is 3 times as large now. And the average IFI even has grown more than 100% over those 4 years. The other line that you see here, the darker blue, thicker line, those are the IFIs across the network that have not accessed IGF yet. And that line, similar to the pink line prior to accessing IGF, has remained fairly flat. So the story that we're seeing here is showing the potential of what it could mean to access IGF for the individual IFIs. And then we're hoping that as more IFIs access IGF, more of the IFIs can take advantage of that growth in the portfolio, support more clients, support larger projects, and support the indigenous economy that way. This is the breakdown of the underlying loan portfolio. So those are the loans as at December 31st, 2025, that IFIs have outstanding to the businesses. And you can see that there's heavy concentration in construction, agriculture, forestry, fishing, accommodation, food services, transportation, and warehousing. And then the other graph, and I'm just looking here how readable this is on the big screen, and I don't think you can see it too well, but it basically shows the loan purposes. And if I go sort of through the stages of a business, the pink portion here of 25.8 million, that represents loans that went to startup businesses. Then the biggest chunk here are the light blue loans. Those are 70 million that went to expansion loans, so expanding an existing business. And we have acquisitions in the light green at 12.6 million, and a small chunk business maintenance, so that would be replacement of equipment and the like. So, Bill, I want to bring in your perspective here and see what stands out to you on the growth trajectories, but also more broadly when you're thinking about what's happening in the Indigenous economic development landscape in Canada. Why does this matter, and how does this overlay to the broader trends that you're seeing?
Yeah, no, thanks, Frank. I think any way you look at these numbers, it's truly remarkable, the growth, particularly the IFIs who have signed on to the IGF. You know, you consider the Canadian economy over that period of time was growing at 1% to 2%. And it is consistent with what we're seeing, that the Indigenous economy is growing much faster. And I think, you know, there are more entrepreneurs starting businesses, growing businesses than you're seeing in the general economy. I think it shows, you know, another point that there was a significant need for this product, that the IFIs have built up this great engine to issue these loans, and this added source of capital has been deployed so quickly and successfully. So it's not surprising. I also think what we're seeing in the broader economy, you know, we're all reading about the major projects and the infrastructure deficit in Canada, and how much money needs to be deployed in that. And First Nations with UNDRIP are front and center at all of these infrastructure projects. So, you know, I'm not surprised by the sectors we're seeing here, because those projects need construction companies. They need local businesses to serve during the construction, transportation, and accommodation and food services. So another thing that stands out is we have this pipeline. You see the number of startup businesses there. Those businesses will quickly go into expansion, and as we saw from the answers, you need more capital at that stage. You need to borrow more. And so we have a pipeline of businesses that are coming down for expansion, and we also have, these businesses that have expanded that might be ready to do acquisitions. So I think you'll see continued growth in these sectors. You'll see, maybe a shifting from startup to the sort of more mature stages. But I'd say also, for the IFIs who have not yet signed up, this is impactful for you and your operation, and it can be a really positive impact for your community. Last of all, we see a number of nations buying the forestry operation or the fishing operation near their territory so that they can control them and they can operate them in a way that is consistent with their values and the long-term health of the land and all the living beings around that land. So I think you'll see these sectors as well.
Yeah, and that's an interesting point that Bill is making about the tie-in into the major projects. We get asked a lot these days, well, how does the work that NACA does, that the Indigenous Growth Fund and the IFIs do, how does that tie into all the discussions around the major projects? And as Bill said, we are seeing a very close connection there. When these major projects go forward, it is all the contractors and the procurement opportunities that are coming out of those major projects to build the major projects, to provide services on site that are opportunities for Indigenous businesses that are financed by IFIs, where we see growth, and the sectors are represented here. I think the other thing that's interesting, as Bill was alluding to, that evolution of a business going through startup expansion, and then maybe when the owner decides to sell or retire, the acquisition piece, we're seeing that in the NACA data a little bit more than the IGF data because time frame is shorter, but we definitely see that entrepreneurs are coming to IFIs for a startup loan, and then a couple years later, they come back for an expansion loan. So we do see that trend even in NACA's overall data. Let's have another look at something here with a Slido question. And let's take a look at the drivers of this growth and get a sense from the room. What do you think is contributing most to the demand for patient capital for Indigenous businesses? And you should see 5 options there. The first being Indigenous people continue to start or acquire businesses at a significantly higher rate than non-Indigenous Canadians. Communities operating under strong economic development frameworks are seeing business development. Persistent structural financial. Oh, things are moving now, so I'm lost. I'll let this move, and we'll see what scores highest here after a couple of minutes.
It's like a horse race. Watching the horses come around the corner. No, I didn't lose money on the horses last night at the casino.
This is interesting that major projects are a key driver here as well. Definitely a topic that we hear a lot about, that is driving this demand for capital. So it seems that things are settling. Nope, not quite yet, but we do seem to have a couple of answers that are really leading the pack here with that participation in those major projects, equity ownership stakes in the major projects, driving a lot of demand for capital for Indigenous businesses. And then still, and this is going back to the founding rationale for the Indigenous Financial Institutions and also the Indigenous Growth Fund, as well as NACA's Indigenous Entrepreneurship Program, the persistent structural financial gaps and constraints around collateral security taking that are limiting in how far Indigenous businesses can access capital to grow and start their operations. And then in third place, we see here that growth, or the strong growth rate in Indigenous people starting businesses and acquiring businesses.
Not surprising, there are new financing programs for those infrastructure projects, but as many of the people in the room know, they're not offered to the smaller businesses who need to support those, and there are still gaps, as we all know, in traditional financing for smaller businesses. So I'm not surprised to see that those two are the front runners in this poll. And that's, I think where IGF can help fill that void and help complete those projects.
All right, we'll close this off and go to our next graph. This one is a similar setup as a graph that I discussed before, where year zero is the year when IFIs are accessing IGF. But rather than looking at the portfolio itself, what we really wanted to look at here is how does accessing additional capital, growing your loan portfolio, impact the long-term sustainability of IFIs. And one trend that we've been observing as we're screening IFI applications and doing our due diligence, do cash flow forecasts, is that the interest revenue from the new portfolios significantly increases over time. And this trend here is even more pronounced than the growth in the loan portfolio itself, with interest on average growing by over 200%. There is a cost of capital against that, but especially right now with government programming through the IEP program offsetting much of that cost, this really helps improve the sustainability of the IFIs and allows them to also grow their portfolios just by retained earnings from this interest revenue. I think this is, we haven't talked about this as much in the past, but for many IFIs that have really grown their portfolio, this has become a significant revenue stream that will be there for them in years to come. So looking to Bill here, how does this growth in interest revenue change what's possible for IFIs in the long term?
Well, I think the speed of that growth shows that the money will flow when the IFI participates in the IGF program. The payback will start coming quickly for all the effort you put in. And I would say it's great for the health of the IFI because, like any business, your objective is to grow your revenues faster than your costs. And if this is particularly startling, you see this was in an environment when interest rates were coming down, and yet the interest revenue has come up overall quite significantly. So I think it's great for the long-term health of an IFI. It gives them that added revenue, higher profitability. Then they have, that excess capital that they can reinvest and loan back out again. They can create reserves, so they have that for any downturns or any shocks that, we talked about earlier, or they can expand to other services, right? They can take that extra sort of profitability and start offering more services to more businesses. So I think it's great for the IFIs, for their long-term health as well, and the types of jobs that they can create in their communities. Maybe I'll just add to that.
Sorry.
This is great for IGF as well, and we're going to talk about, I think, adding more IFIs, and we talked about the benefits to the IFIs themselves, but as the Indigenous Growth Fund adds more IFIs and becomes more diversified geographically with more borrowers, it becomes more attractive to private investors because the risk is, whether it's right or wrong, perceived to be lower. And then the fund itself can raise more money with private investors, and it just builds on itself. And then the impacts will be, will trickle down to all the communities in terms of the welfare and the types of investments they can make for the welfare of their communities.
So I'll bring up last couple of slides here. This is a different take on the growth of the IFI network at large in terms of lending and the role that IGF Capital has played in that growth. So we're seeing on the left side the loan portfolio size of all IFIs over time, ending at over 425 million in 2025, so that's March 31st, 2025. And what you see is at the end that significant growth. And then we've broken this down by the 8 IFIs that are accessing IGF, so those are the dark blue ones on the top, and then the IFIs that are not yet accessing IGF at the bottom. And what you can see is that most of that portfolio growth across the network has been driven by the IFIs accessing IGF, and if you look at the numbers, it closely tracks the amount of capital that we have put out to those IFIs. So this is again showing what is possible. I think our hope is, as I said before, that as more IFIs do the same thing, that we see this trajectory continuing and being driven by more IFIs as they join the IGF and access that capital. On the right side, similar graph, but it's looking at the annual lending for those IFIs, where we've also seen a significant growth in the last few years, and we're now at 176 million in IGF capital in these IFIs. So as I pull up the last Slido here, because I think we have enough time for it, what does this tell you about the potential impacts as the IGF brings more IFIs into the pool of IFIs accessing IGF? Oh, yeah, if you would just want to wrap this up a bit. Bill.
Oh, which one am I going to pick to win? Don't have any money left to bet, but whoa.
Yeah, this is interesting to see. So we're starting to see a lead answer emerging, which is IFI readiness to access IGF capital. And that has been something that we've worked on within the IGF team over the last couple of years. For those of you who were here at the general managers meeting on Tuesday, we've launched, led by Aaron Stalen, a access to a credit skills tool offered through the Corporate Finance Institute Canada, and are working closely with our colleagues at NACA as well to see what else can we do to improve that readiness of IFI so that they can take advantage of both the capital that's available through IGF, but also, adjacent to that, some of the other new funding that the federal government has provided through the Indigenous Entrepreneurship Program. Accessing more private capital is second, and that is top of our list as well. When we project out that we have 2 to 4 new IFIs accessing IGF, we know some of these applications are fairly sizable potentially this year. That means we're getting close to having commitments to IFIs that would absorb the entire capital that we have available from our investors later this year or in 2027, and are actively fundraising now to allow IFIs to continue to grow without disruption. So that is a big priority for us, that fundraising, we're really focusing in on Indigenous investors as potential first or new private investors in this round.
I mean, what sticks out to me, just from the number of people answering, that the IFIs are answering the call. They're ready to answer the call, but we need to give them more resources to be ready for that. And I think that gives us direction of where we can invest our time and resources. And, we need to work to raise more private capital. And I think, the track record that's been built with the portfolio so far is going to help that. And, we're at a growth inflection point at the IGF where we can access that additional capital. So, the entrepreneurs are answering the call, the IFIs are answering the call, and now it's, our turn to help them prepare for their next wave of growth by bringing in that capital and, going to extending our geographical reach as well. We've talked about that as being an objective. So there's some work to do here, Frank.
There is, and we'll look forward to updating you again in a year's time on where that work has led us. I think this is a great spot to wrap up. Thank you for your time, and thanks, Bill, for being up here on stage with me, and enjoy the rest of your day.
Thank you, everyone.
What on earth happened at the casino last night that our presenters are betting on their Slato responses? Thank you very much to our presenters this morning, Bill Murray and Frank Richter. Thank you to our sponsors for the event, the Platinum sponsor, TD, Gold sponsors, EDC, Futurepreneur and Fern Software, Silver sponsors, BDC, Alto, and FCC, as well as thank you to our sponsors for the events, AFOA Canada, Canada Post, Air North, Yukon's Airline, Meridian Credit Union, and TP Group of Companies. As we are coming up to our health break now, that is sponsored by Yananchia Housing Finance. Go over to our vendor markets, sponsored by TikTok, and check out the vendor markets there. We are now on our health break. Grab a coffee, grab a glass of water, just grab a moment for yourselves, and we'll see you in 15 minutes.